We are joined today by David Maxwell from UnitedHealthcare Golden Rule, and he's going to be going over some great product updates for our team. David's been with United for a long time. In fact, I used to work with David a little while ago, so I also know how well these products are put together. So hope you get some valuable information from all of this, and we'll open it up. I think we can open it up from the chat side continually. So if there's any questions, I'll try and respond as we go along as David's talking. And take it away, David.
All right. Well, great. Thank you, Sue. Like she said, my name is David Maxwell, and I'm National Account Executive with UnitedHealthcare. I've had the pleasure of having the AHCP relationship. Actually, I took it over from Sue. So whenever she went over to AHCP, so that's how long I've had it. But I've been with UnitedHealthcare for a little over 10 years, and in this role for about 7 of those years. And so what I'm going to cover today is kind of a general product portfolio overview. I'm not going to cover all of our products because we would, do an all-day session with that, and I know our attention span kind of fades out after a while. But I'm going to cover really the 3 main areas of our products, and I'm not going to really dive into each one. You're all agents, and you know plans, so I'm going to just kind of cover some of the nuances, but dive in a couple of them. So what I'm going to cover today, if I can get my thing to move right. First off is about the carrier strength. Why choose UnitedHealthcare? Obviously, our branding and our size and our strength are very key. We've worked for many years. Golden Rule before UnitedHealthcare bought us out. We've been around for over 70 years. Started in Lawrenceville, Illinois, and actually I was just over there about 3 weeks ago and saw the little plaque, where the company was founded, over 70 years ago in a house, and obviously grew dramatically from that over the years. And UnitedHealthcare purchased us about 13 years ago. We are an A-rated company with AM Best, a huge national network, one of the largest in the industry nationwide. And again, with our experience and our brand, there's a reason. If you look at the stock market and you see the Dow Jones, you have your Fortune 500 companies. Fortune 500 companies, your Fortune 200 companies, your Fortune 100 companies. Well, UnitedHealthcare, we're a Fortune 5 company. So when you talk about financial stability and just growth in the market and name recognition, you sell a UnitedHealthcare policy, you don't have to spend that extra 10 or 15 minutes building that trust factor with your client as far as who you're selling. You don't have to spend that extra time explaining what carrier you're selling them, because UnitedHealthcare is obviously a brand across the board. So not only is it going to give you a better trust factor with your client, it's also going to shorten your sales cycle, because again, you have to spend that time explaining who we are. Obviously, with our industry experience, highly rated, top-tier networks, a very reliable network, and also persistency. We're seeing an increasing amount of persistency, not only on our short-term products, but on our Health Protector Guard, which I'll cover here in a little bit. So like I said, I'm not going to cover all of our products because we would be here generally all day long, but I'm going to cover our short-term medical, our Health Protector Guard plan, which is our fixed benefit plan, as well as our newly launched Accident Protector Guard series of plans. This is a new product for us, launched about a little over a month ago, but we recently expanded the states and the footprint, and we'll continue to do that as well. So like I said, on the short term, this has been our mainstay for a few years. With UnitedHealthcare, it's funny, we were talking with our CEO a couple of weeks ago, and just showing how proud he was of not only our division, but also our team, working with, national GAs and such. Because if you think about it, we've pretty much had 4 different core lines of businesses in the last 5 years. We had, prior to ACA kicking in, we had the underwritten plans. And then for that first year, we didn't do ACA plans, so we stuck to short term. And then we switched to ACA. And then obviously that was a big loss of almost $2 million. So then we switched back to short term. And then we switched, when the durations went shorter a little over a year ago, we switched to fixed benefit plans. And now we're kind of in that hybrid as far as, we're waiting for short term to come back to longer duration. And I'll cover some of that as well. But the fact that we've been able to pivot so much and continue offering great products is just it's a pat on our own backs, and it also reflects the flexibility of you, the brokers. Not being stuck in a rut and saying, I'm going to offer this. Hey, when times are changing, we need to change along with it, and you brokers have been doing the same thing as well. So on the short-term area, we do have these products in 31 states. And the reason we got different colors here, so the states in the gray color are the states we don't have short-term products in. The states, in blue and yellow are the states that we have short-term plans available. The reason I differentiate the colors is because the states in the blue are the states that we offer the 3x2. And yes, we fully recognize that some carriers out there are offering a 3x4, so you can offer, sell 4 consecutive short-term plans at 3-month durations at the same time, which gives them, in essence, 12 months of coverage. We decided not to do that right away. Primarily is because cost factor. As you go a longer duration of plans, the price has to increase. And so that means we would have had to refile some pricing, and we wanted to get it quicker to market on that. For those of you who sold short-term with us in the past, when we had longer duration, that a 7 through 12-month plan costs on average about 45% more per month than a 6-month or less plan. So the same would hold true if we're holding that risk factor over 12 months. So what we did is just said, we're going to do a 6-month, 3x2, so you can get 6 months of coverage. And hopefully by the end of those durations, we'll be close to the longer duration short terms coming back. So again, all the states in the blue are the states you can now for the 3x2. The states in yellow, you can still sell consecutive plans, but you can't sell them at the same time. Like I said, back-to-back plans are available in all states except for 3, Connecticut, Michigan, and Wisconsin's got a little bit of a difference. So Wisconsin, you can do 1 back-to-back plan, but then you have to have a 63-day wait after that. Michigan and Connecticut, again, are 2 different ones, so you can't even do a back-to-back plan with them. You have to have a gap in your coverages. But all their states, including Arizona and Missouri, Florida, so of course, you can sell as many back-to-back policies as you would like. Also, next day effective dates. So some carriers say you can only have an effective date of the 1st or the 15th. Some say you can't have an effective date after the 28th of the month. So on our plans, you can have any day as the effective date. It is simplified underwriting. There's about 6 questions. They're all yes/no answers. If you answer yes to any of the questions, it's a decline. You answer no, it gets issued. And then in most states, we have 4 plan options. Virginia and Oregon have a little bit difference there, but all their states, there's 4 plan options. Now, all 4 plans are a deductible and coinsurance design. We do have one of those plans, though, that does give you a copay for doctor visits. But then the rest of the benefits on those plans are deductible and coinsurance. The other copay we do have on all the plans is we do have a $75 urgent care copay. So again, all other doctor visits are deductible and coinsurance at our contracted pricing, which is key. We have that network. On average, you're going to get about 50 to 60% discounts on those services from the billed amount to the contracted amount. So you take advantage of that contracting pricing, but then you pay that up to your deductible. And once you meet it, then you have your coinsurance and such. Then there's 2 different lifetime plan options. There's $650,000 and there's $2 million. What you'll probably find is that $2 million is where you're going to go, only because the pricing is not that much difference. So if you choose the identical same plan, one with the $600,000 lifetime max, the other with a $2 million lifetime max, you're only looking at about a couple dollars difference in premium. So most people are taking that extra, the extra coverage on there. You can choose deductibles anywhere from $2,500 up to $12,500. And this kind of really comes into play when we start talking about Health Protector Guard and how we can offer your client a fully bundled option. What we see a lot of is selling a short-term plan with a very high deductible, $10,000, $12,500 deductible. So that way they have a cap on how much their exposure is during their short-term plan, and then selling the Health Protector Guard plan along with it, which helps pay that deductible as they go on. The government disclaimer here is that it's not minimum essential coverage. So if the IRS chooses to levy a penalty because of not having MEC coverage, they would have to pay that. Again, that goes away next year, though. So just keep that in the back of your mind. Now, obviously, there's been a lot of talk about extended durations on short-term plans, and we do look forward to being able to offer those. When that law and rule changes, we'll be fully prepared for it and be ready to go once we're able to. I can tell you there's going to be no one else that's going to be offering longer duration before us, and there's probably going to be, so we're all going to be at the same time, more than likely. I think all the air carriers are going to be prepared as well. Now, it is expected that some states might challenge and not offer extended duration. So even though CMS will come out with a ruling allowing it, it is still up to each individual state of what they want to do. Again, if we remember back a little over a year ago, some states had a 6-month limitation. Some states did 12 months. California, for example, which doesn't really affect us because we don't offer short-term plans in California, but California is talking about either not allowing short-term or keeping it at 3 months. But then there'll be a lot of states, though, who will go back to the longer durations, which we'll be, again, happy and ready to do. So that executive order that President Trump signed was signed in October. He gave CMS 60 days to come out with a new rule. So that would have put it mid-December. That day came and went, and we had to wait 2 more months until they actually came out with the new rule. So the proposed new ruling did come out February 20th of this year, and it went through a 60-day comment period, which just ended, by the way. So during that time, insurance companies, providers, brokers, agencies, as well as people who don't want to go longer durations, all put their comments in. And then at that time, so right now CMS is reviewing all those comments, and they're making up their final ruling. So the first one was a proposed rule. Now they're trying to draft their final rule. We don't know how long it's going to take. But once that is done, they will announce the final rule. And then once they do, it kicks in 60 days from that point. So let's just say it's May 1st today. So let's say they came out with the new proposed rules on June 1st. Then that means the new rules will kick in on August 1st. Okay, 60 days later. And we're going to need those 60 days because, there's more in the rule on top of longer durations, okay? If it was just as simple as flipping the switch back, they don't need to write a new rule. They just go back to the old rule. But there is more to the ruling other than longer durations. There's talk about auto renewals in there, and there's talk about different benefits and such. So we're just waiting on that, but once it's out, we'll be ready to go. But like I say, there's really no crystal ball to say when it's going to start. Just once they come out with the final ruling, it'll kick in 60 days later on. I do want to point out, though, that even when we offer 12-month plans, 60% of our customers chose to purchase a 6-month or less plan. So even though the 12 months is obviously out there for a lot of people, keep in mind over half of people still went 6 months or less. Now, with our short-term plan, we currently offer, we have over 1 million providers in our network, up to 6,000 hospitals, and like I said, huge savings, and everything is no balance billing. So by utilizing our network, that's a contract the provider signs and says that they can only accept what our negotiated rate is. So, if, for example, lab work, there's sometimes they'll bill $250 for lab work, and we'll reprice it for $10. Well, that's all they're going to get. They cannot come after your clients for the additional funds between what they bill and what our contractor pricing is. So again, the portfolio is very flexible as far as you can have many different deductible choices and co-insurance options as well in the short-term plans. It is simplified underwriting, so it's simple yes or no questions on about 6 of them. They can apply anytime. So there's no open enrollment, no special enrollment. They can have a next day effective date. The advantage, people ask, well, why is short-term so much less expensive? Well, because we don't have any unnecessary benefits. We don't have those things that are ingrained in the marketplace plans that not everybody needs, like pregnancy, for example. Yes, is it a need? It is, but not for everybody. Someone in their 60-year-old ages doesn't necessarily need maternity or pediatric dental and vision. So it just kind of depends. So these are no unnecessary benefits on here, and that's why it's cheaper. There's also more affordable pricing as well. So next thing I'm going to cover is our Health Protector Guard plan. So on the right is our map. As you can see, it's expanded a lot. We launched this product originally in early 2017, and we launched it in about 7 states. And at that time, our goal by the end of 2017 was to be writing 200 policies a day in this product. It was a new product for us, even though other carriers have had a product in this family, as far as fixed benefit. It was new for us. So much so that we actually, before this, we partnered up with another carrier to have a fixed benefit plan as a Band-Aid until we got ours ready to go. And then once we did, we launched it. And as we increased our states across the country, we took away our coverage on the other plan. So like I said, our goal by the end of 2017 was to sell 200 Health Protector Guard plans each day. We were hitting that mark by April. We expanded our states from like 6 up to 15, and it really kicked on with the agents. It's a complete testimony of their willingness to look at what's best for their client, and the fact that our products, this product is about as close to an underwritten plan back in the days as you can get. It doesn't have your max out of pockets like old health insurance does, but as far as what it covers and the amounts it's covering, it's quite good. So again, our goal was 200 policies by the end of the year. We're hitting that by April. Actually, by the end of the year, we're hitting over 800 policies a day. Now, that's a little bit inflated because that's during open enrollment. Of course, we all are selling a lot of products during open enrollment. So it's come down some from that 800 mark, but we're still selling well over that 200 mark each day. And as you see here, the footprint of this is very large. It is also guaranteed renewable. So once you go through underwriting, you can keep this plan, or a client can keep the plan, until one of two things happen. They either want to cancel, quit paying their premium, or they turn 65. So if they get the plan and go through underwriting, it doesn't matter if they get diagnosed with cancer, we're not going to drop them. They can have multiple heart attacks. We're not going to drop them. There's no lifetime maximum benefits on this. We do cover pre-existing conditions after a 12-month waiting period. So if someone has a pre-existing condition, and a pre-existing condition, by the way, is anything that they've received medication for or been diagnosed or received treatment for in the previous 12 months. So today's May 1st of 18. So anything I've been taking medicine for, or I broke my arm 8 months ago or whatever, anything in the past 12 months, that's not covered for the first 12 months of my policy. But then after that, it's covered. Also, this is an open access benefit plan, which means there is a network. It's called the multi-plan network, but their benefits are going to not change no matter where they go. So whether they go to an in-network provider or an out-of-network provider, they still get their same exact benefits. The advantage, of course, if they go to in-network doctor or hospital, is they get the advantage of the in-network pricing, because those network discounts are available only when they use the multi-plan network. Also, we're not going to coordinate benefits with other forms of insurance, and that's a good thing, because what that means is we're going to pay our benefits regardless of what the client owes. Okay, so let's say they have a short-term plan and they've met their out-of-pocket maximum on that. And so let's say the client doesn't technically owe anything for this surgery because they've met their out-of-pocket max on their short-term plan. These benefits will still pay. Okay, so they can actually come out ahead in that area. And again, fixed benefits are uncover them for doctor visits, ER, urgent care, pharmacy, wellness, surgery, and hospitalization. We have some other things in here too to help retention. Of course, there's one thing to sell the policy, but what our goal is, and what your goal too, is to have your client keep the policy. So there's a couple of features in here that I'll cover, like rollover doctor visits and increasing your benefits for injuries. So why is Health Protector Guard a little bit different than other things? Well, for one thing, we can roll over doctor visits. So you'll see in our plans that we have up to 10 doctor visits per person per year, and you can roll 5 over. So after that first year, you could really have 15 doctor visits in your back pocket to use for the next year. Another feature we have is an increasing injury benefit. This says that if you're in the hospital for an injury in years 2 and beyond, your benefit actually increases over time. Again, help retention. Also, we have a 4-tiered surgical payout schedule. So a lot of carriers on surgeries will pay a flat amount, $1,000, $2,000, $3,000, usually nothing more higher than that for every surgery you have. Well, we have a surgery schedule anywhere from $500 to $10,000, depending on the severity of the surgery, and I'll cover that in a little bit too. Of course, our brand and recognition, that shows the persistency. Right now, our persistency is running about 15 months. Okay, so when you sell that policy, that odds are you're going to get that in the renewal period when you write it. So hospital services, how does the benefit work? As you can see here, there's inpatient illnesses or injuries. So inpatient benefit is $1,000 a day up to $5,000 a day. The reason I had the 2 highlighted in red is because when we launched this product last year, we only had 5 plans. The plans that are in the darker black color. So Choice Value, Choice Plus, Select Value, Select Plus, and Premier Plus. And what we found is 85% of our sales were right here in these lower 3 plans. Why? Price, of course. And we had a big price difference between a Select Value and a Select Plus. So to try to get a broader mix of business, but knowing price is a big concern here, we developed 2 new plans with a little bit variances on the benefits. Okay? So we kind of take away some benefits and add to some others. Because what we recognize is, most customers, when they buy insurance, they're buying it for the big stuff, right? They're buying it because they want to make sure they don't lose their house if they're in a hospital for 20 days. They want to make sure, they're not filing bankruptcy over certain things. So they're more concerned about the big items versus the small everyday issues like doctor visits and prescriptions and having x-rays and such. They're worried about the big ticket things. But there is that customer base who's more worried about the everyday issues and not worried about getting cancer, not worried about being in the ICU, but they want to be able to go to the doctor as many times as they want. So we've kind of catered these two new plans for that customer. What I see the biggest thing though is we have a plan for everybody. So if someone's concerned more about the bigger things versus the smaller things, we have that plan. If someone's concerned about the everyday doctor visits and prescriptions and x-rays and labs, we have that for them as well. So as you can see here again, $1,000 up to $5,000 a day for inpatient hospital stay, unlimited benefit. Okay, if they're in a hospital 365 days in a year, they still get their benefits, and it does not end. Now, one of the things I mentioned earlier was to help persistency and increasing injury benefit. This says in year 2 and beyond, if I'm in a hospital due to an injury, my benefit actually increases. So as you can see here on this Choice Plus plan, first year I'm getting $2,000 a day if I'm in a hospital. In year 2, if I'm in a hospital due to an injury, I'm getting $2,500. In year 3, $3,000, and so forth, and it caps out where it doubles. Now, intensive care, I'm going to get anywhere from $2,000 to $10,000 per day just for ICU. And we see these limitations here. These are 31 days or 60 days. That's per confinement. Those aren't annual maximums. That's per confinement. So if I'm in the hospital and I'm on this primary preferred plan, I'm getting 60 days of ICU when I'm admitted to the hospital. I'm discharged, and let's say 3 months later or what, I'm back in the hospital, back in the ICU. Guess what? I have 60 more days, because that's a new confinement, 60 more days of ICU coverage. The other thing, too, is these benefits stack up on top of each other. So, for example, I'm on a select value plan that says I'm getting $3,000 a day for a hospital stay, but I also get $6,000 a day for ICU. So if I'm in a hospital, each day I'm in the ICU, I'm getting both benefits, because I'm getting the $3,000 for every day I'm in the hospital. And then for the days I'm in the ICU, I'm getting an additional $6,000 a day. So you can see, so I'm getting up to $9,000 a day on this plan if I'm in the if I'm in the ICU. Now each day the doctor comes around and pokes your head in the in your room and asks how you're doing. Well, they charge for that, so we're going to give you $100 a day for those visits. ER on the two choice plans and the select value plan, you get 2 visits at $200 a day, and then on the preferred plans, you get $300 for 2 visits. Again, what we do, we said, hey, these people are more concerned about the everyday things, so ER visits, and doctor visits. So we'll give you a little bit more room there. Outpatient facility surgeries. On these 2 plans, on the choice plans, you get $500 just for the facility. So if you have an outpatient surgery, it's going to break it up. You get a certain amount for the facility in itself, anywhere from $500 to $1,000, and you get 2 or 3 surgeries, outpatient surgeries, per calendar year per person. Okay, so again, this is the outpatient surgery facility fee. For the actual surgeries, it's a different tier. So what we did, we broke up into 4 different tiers. For the lower cost surgeries, it's $500. For tier 3, $1,000. For tier 2, $5,000, and for tier 1, you get $10,000 reimbursement. So if you're having it done outpatient, then you get your facility fee plus your surgery schedule. If you're having it done inpatient, then of course you're getting your inpatient hospital benefit, $1,000 to $5,000 a day, plus you're getting this surgery benefit here as well. Now, if it's a tier 1 or tier 2 surgery, which I'm going to cover kind of examples of what each tier is, but if it's a tier 1 or tier 2 surgery, you get your surgery benefit, and then you also get, if there's an assistant surgeon, you get 20% on top of that for the assistant. So if I'm having a tier 2 surgery, $5,000, and there's an assistant, I'm getting there $1,000. And then no matter what my tier is, I'm going to get 30% of that benefit for the anesthesiologist. Okay, so you can see here, again, tier 2 surgery, I'm getting $5,000. For an assistant, that's another $1,000. Anesthesiologist, $1,500. So I'm getting $7,500 for that surgery, of course, plus my facility fee or plus my inpatient hospital confinement. So how do we recognize the tiers? Well, tier 4, which is that $500 surgery, that's something that's going to require local or regional anesthesia, something like an emergency C-section or closed treatment of a fracture or dislocation. Tier 3 surgery, that's the $1,000 surgeries. That's something that's going to require general or conscious sedation, like a colonoscopy, insertion of a pacemaker or a stent or a heart cath. Now, when I say colonoscopy, that's for diagnostic colonoscopy. That's not for a preventive colonoscopy. Okay, that's for diagnostic, not preventive. We do have a wellness benefit that's separate, but again, here on the colonoscopy, I just want to reiterate, it's not for the diagnostic one. For your annual checkups, that's for, hey, something's wrong, I need to go get a colonoscopy. Tier 2 surgeries, this is probably the most common ones. Requiring general anesthesia. That's something like hip replacement, knee replacement, rotator cuff repair, removal of your tonsils, removal of adenoids, removal of your gallbladder, appendix. So those type of things. That's a tier 2 surgery. That's a $5,000 benefit, of course, plus your assistant and the anesthesiologist. And then tier 1 surgery, $10,000. That's the most significant surgery. So heart surgery, brain surgery, organ transplant and such like that. It's a $10,000 benefit. So on doctor visits, do want to point out on doctor visits, there is a 5-day waiting period for doctor visits, for illnesses, I should say, for illnesses. For injuries, no waiting period, but for illnesses, there's a 5-day waiting period. We just want to make sure someone's not buying the plan because they don't feel good. They go to the doctor, they get their reimbursement, and then they cancel the plan the next day, okay? So just a 5-day waiting period for illnesses. And then what we did was we grouped in both doctor visits and urgent cares into one benefit. So your clients will get a $100 reimbursement for your doctor visits and urgent care. As you can see here, these are 2 visits per person per year, 5 visits per person per year. And again, on these 2 new plans, we recognize, hey, they're worried about the everyday things. We're going to give them 10 doctor visits per person per year. Okay? If they get a second opinion for a surgery, $250 to $500. But again, 10 doctor visits, 5 visits, 2 doctor visits. Another benefit to help retention, rollover benefits. Down here at the bottom. A member can roll over up to 5 unused visits to the next year. Now, there is a little asterisk here that says that if your plan's effective July 1st or after, they have to wait another year to do it. But if you have a plan that's effective before July 1st, then come January, they can roll those doctor visits over. And there's nothing for them to do. I mean, we're going to automatically roll over any unused doctor visits up to 5. So on the bottom 2 plans, they get 2 doctor visits. If they only go to the doctor once, next year they have 3. So again, on the 5 and the 10, they can roll over all their unused visits up to 5, and that'll be done automatically for them. Wellness. I mentioned the 5-day waiting period for illnesses. There is a 6-month waiting period for wellness. Why? Same reason. We just want to make sure someone's not buying the plan, they get their wellness benefit, and then they cancel the plan. So you get $100 up to $250. Again, on these 2 new preferred plans, increase the benefit on wellness because that's what people are worried about who's buying those plans. They're worried about doctor visits. They're worried about wellness. They're worried about x-rays and labs. So a higher benefit there. Prescriptions. Every plan, they'll get a discount card. So it doesn't matter what of the 7 plans they choose, they all get a discount card. And they're going to get discounts on prescriptions. So actually in the mail, what your clients will get, they'll get 3 things in the mail. The first thing they're going to get is their policy. Of course, it'll be their policy with a certificate and a claim form in case they need to file claims. And I'll cover claims here in a second. Second thing they're going to get is a prescription card, which I'll show you here in a second. And then the third thing they're going to get is their prescription card. So that's where they'll take that, and there'll be 3 separate mailings, 3 separate, packages in the mail or envelopes. And they might come on different days. But on their prescription card, they get discounts on all their prescriptions. And usually the question is, well, what about pre-existing conditions? Since it's a discount, they would still get their discount on pre-existing conditions on prescriptions, okay? Because it's strictly a discount. However, if they choose any of the plus or preferred plans, they're also going to get reimbursements for those prescriptions. Now, so when you see these dollar amounts, $10, $20, and $40, these are not copays, okay? They look like copays, but they're not copays. These are reimbursements. So this says if I choose a Choice Plus plan and, I use my discount card to get my prescription, and then I can turn that receipt in, okay, with a claim form, and I get reimbursed $20. Doesn't matter how much it costs. If I went to Walmart and got a $4 generic prescription, I just turn that receipt in with a claim form, and I get reimbursed $20. Okay? Now, you get 12 fills per year. That's not 12 refills. That's 12 reimbursements. So if I go, I had the flu and I go to the doctor and they prescribe me with a couple antibiotics and I go get them filled, well, that's 2 right there. Okay? Outpatient labs and x-rays and testing. I'm going to get anywhere from a $100 to $300 for x-rays and labs. What we did here too with these 2 new plans, we had it happen early on where, someone had a plan down here at Choice Plus. They didn't feel good. They went to the doctor. Doctor did a strep throat culture. And that cost like $20 being in network. They were getting $200 reimbursement. Hey, great. They love the plan. It's working for them. They're seeing the benefits. But then later on, they went and had another test done, and they got nothing. They're like, well, wait a minute here. Where's my money at? So what we did here is we just said, okay, instead of giving you a large amount 1 time a year, we're going to give you a smaller amount 3 times. And that's actually helped out because, again, what do clients want to see? They want to see their plan working for them. And that's actually helped out retention. When we see people using their plan, they're going to the doctor, they're getting reimbursed that $100 on there. They keep the plan because they see that I'm getting a benefit from there immediately. Okay. And I kind of want to cover that too. So, as you saw on the doctor visit, they're getting $100 reimbursement. So how do claims work? Well, what happens is if I go to the doctor, I show my card. That's how they know the plan I have. They will file the claim with us on that multi-plan network. By showing the card, that's what gets them the network discount. Then once we process the claim, we reprice it at that contracted pricing, and then we send the provider what they are owed up to their benefit. Okay? So again, on the doctor visit, they're getting a $100 reimbursement. If they go to the doctor and that network pricing for that, they go because they think they had the flu, and that network pricing is $45, let's say. And on average, that's what a doctor visit is. It's about $45 as a network pricing. So what we would do, we would take that $100, we would pay the doctor the $45 they're owed, and then we'll cut a check to the client for the $55 that's remaining of their benefit. We're not going to pay the doctor the full $100 and have them reimburse the client. We will pay the doctor what they're owed, and if there's anything left, we pay the client that money. So the same example on that client who went to the doctor for a strep throat test, the bill, I think it was like $22 what it was. So we paid the lab $22, and we cut a check to the client for $172, and that's how they got it. Now, if the client doesn't care about the network discounts, which I think they should, but let's say they don't care, or they go to an out-of-network provider, then they just file the claim on their own and they get the full amount. Okay, but of course they're paying what the doctor charged though too. Outpatient imaging, so MRI, CAT scans, you're getting $500 up to $1,000 once a year. Chemotherapy. What we did here is we broke up in two categories. First off, we have oral chemotherapy. So someone taking a chemotherapy pill instead of going for outpatient radiation or chemotherapy. They're going to get $1,000 a month for 3 months, or $2,000 a month for 6 months. So again, I'm on the oral chemotherapy. I'm going to get $1,000 this month, $1,000 next month, and $1,000 the next month. Now, if they do outpatient chemo or radiation, non-oral, they're going to get $1,000 a day for 40 days of treatment, or $500 a day for 20 days, or $2,000 a day for 60 days. Again, on those two plans in red, the person's more concerned about doctor visits and ERs and such, not so much concerned about the cancer benefit. They still get the cancer benefit, but just a lower amount. Okay. Now, I'll tell you, when I first saw this plan a little over a year ago, I looked at this, I thought, man, 20, 40 days, is that enough? I had no experience, even though I've had family members who pass away from cancer, had no real experience of really seeing it. My mother-in-law has lung cancer, and so she's been going through chemotherapy. So it wasn't until then I realized that, I just thought people go for chemotherapy, they're there every day, or they're there, 3 times a week. I didn't realize that they go, usually 2 or 3 days, and then they'll take a break for 3 or 4 weeks, and they go back for another round of chemo. So knowing that now, I say, okay, if she's going 3 days a month and taking breaks between her sessions, that's 36 days a year. I'm more comfortable now with this benefit being at 20, 40, or 60 days against a calendar year. Once January 1 gets here, the benefit starts all over again. I mentioned the card earlier. This is the card your client's going to get in the mail. As you can see there, it says UnitedHealthcare, upper left-hand corner, multi-plan network in the bottom right. On the back side are the phone numbers for providers and for insurers to call. So they get a hard ID card in the mail. Finally, I'm going to cover our Accident Protector Guard plan. These are brand new plans out here, available in 16. Well, it was 16 states. Now it's grown. So all the states, non-gray states here. So the states in blue, orange, and green have now launched, and actually Indiana has launched as well. So as you see, this portfolio is growing on top of that. We have 3 types of plans. We have the Expense Guard, which is an AME-style guarantee issue plan. We have the Pro Gap plan, which is accident, critical illness, AD&D, and also has a hospital admission benefit. And then we have the Pro Guard, which is both guaranteed issue and simplified issue, and it has the accident, CI, and AD&D, and I'll cover it here in a little more detail. So what's covered on the accidents? The accident portion of the benefits will pay out in addition to any other insurance. So again, even if you've met your out-of-pocket maximums on your other insurance, we're still going to pay. We're going to pay what the bill shows, okay, up to your benefit. Meaning, if I buy a $5,000 accident benefit and I break my arm, and the EOB comes across and says that bill is $2,800, then we're going to pay $2,800. Okay, even if you owed nothing, the bill says $2,800, we're going to pay $2,800. Now you still have $2,200 left of that accident benefit. Okay, so if something happens later on, you bought a $5,000 benefit, you've only used $2,800 of it, you still have $2,200 left over. Also, other medical coverage is not needed. So even though we highly encourage you to sell this with other products, but there's no mandate that says you must sell this with an ACA policy, okay? Or you must sell it with, a group policy. You can sell it with short term, you can sell it with group, you can sell it with Christian Ministries plan, ACA, or, with a bundle of critical, Health Protector Guard, critical illness and such. Also, on a lot of other carriers, if you're selling a family, the primary has the benefit, the spouse gets half, and the kids get 25% of whatever that benefit is. With our plans, the spouse and the kids are in the same level. So, if I buy a $30,000 critical illness policy, my spouse and my kids each have a $15,000 critical illness policy. Okay? On our critical illness, it is a true critical illness. So it's not simply a heart, cancer, or stroke coverage. We actually have 14 different trigger points, and you can get paid up to 3 different trigger points. So in other words, if I buy a $50,000 CI benefit, I can actually get paid $150,000 for my critical illness. And I'll explain that here in a second. So I mentioned the 3 different plans. The expense guard, it's guarantee issue. Client chooses anywhere from a $5,000 to $20,000 accident benefit. The AD&D will match up upon that. Guarantee issue. On a Pro Guard, we actually have both guarantee and simplified. And then you can also pick your critical illness benefit. And of course, your AD&D matches up with your accident plan. Our Pro Gap plan, you choose the accident. The CI will match the accident. The AD&D will match the accident benefit amount. And then you also get a $2,500 per person hospital admission for illnesses. Okay, it doesn't cover you for admission for accidents. That's why you have your accident benefit. But if you're admitted to the hospital for an illness, then you have a $2,500 benefit on that. So now, a little more detail on the expense guard. Again, guarantee issue. Client chooses anywhere from a $5,000 benefit to $20,000 benefit. ADD matches up. So, use those benefits to, if you have an accident, you might be missing work. You want to have a high deductible health plan or some unpaid non-medical bills. Use that money to pay for those expenses. Again, guarantee issue, $5,000 to $20,000 accident, matching AD&D. The Pro Guard plan. This plan was designed more to go with someone who's buying a Health Protector Guard plan, maybe even a short-term plan as well. So it's kind of designed more for a non-ACA customer. Again, we have guarantee issue, so the client can choose anywhere from a $5,000 or $7,500 accident benefit. The critical illness, on the guarantee issue, the critical illness will match the accident, and of course AD&D matches as well. If they go simplified issue, which of course is a little bit cheaper because we're actually doing underwriting on this, they can choose a $5,000 or $10,000 accident benefit. On the critical illness, they can choose $10,000, $20,000, $30,000, or $50,000 CI. And then, of course, the AD&D matches with the accident. On the Pro Gap, again, goes through underwriting, simplified issues. They can choose anywhere from a $2,500, $5,000, or $7,500 accident benefit. In this case, the CI and the AD&D will match up. And then you have a $2,500 admission benefit. So how do we pay out on the accident benefit? Well, it'll pay out the covered services for burns, lacerations, diagnosis, concussion, ER, or urgent care that happen within the first 48 hours after the accident. And then within the first 30 days of the accident, we're going to cover ambulance, anesthesia, doctor visits, fractures, hospital, ICU, labs, x-rays, MRI, CAT scans, prescriptions, prosthetics, and surgeries. I'm going to skip to the right-hand side, AD&D. This benefit is like most AD&D benefits. You lose 2 limbs, you get 100% of your benefit. 2 hands or feet, same thing. If you only lose 1 limb, hand, or foot, you're going to get 50% of the benefit. And if you lose a thumb and index finger on the same hand, 25% of the benefit. The hospital admission benefit is for illnesses. You get 100% of the benefit. So you're admitted for an illness, $2,500. On the critical illness, again, we have 14 trigger points: heart attack, stroke, invasive cancer, coma, paralysis, and so forth. If I purchase a $50,000 benefit and I have a stroke, I'm going to get 50 grand. Then, if at least 6 months go by, something else happens to me. Okay, so I've used my stroke benefit. I can't do that. I have 13 more trigger points though. So 6 months go, at least 6 months go by, and then I have a heart attack. I get another $50,000. Now that benefit's gone, but I still have 12 more line items. So something else happens to me. I get cancer. I get another $50,000. So you can get your benefits on 3 different categories, and you'll pay 3 different times. Can I give an example of some pricing? Guarantee issue expense card, husband, wife, 35 years old, you're looking at about $52. For a simplified issue with a $10,000 accident, $20,000 critical illness, you're looking at about almost $100. And then for the simplified issue, if you do $2,500 across the board for, again, husband and wife, you're looking at $48. Of course, we also have our other ancillary products, which I won't cover because we're getting close to our hour mark. But dental with vision, standalone vision, hospital safeguard, accident, critical illness, discount card, term life with critical illness, and then we also have a 50-plus dental. So a dental plan is designed for 50-year-olds and older that has less waiting periods and some higher benefits. Now, finally, I do want to cover our latest contest. It's called Triple Play. It's an unlimited bonus. Now, you must register for this. As you can see here in the orange, it says register now for Triple Play bonus. I know you've all been receiving emails if you're appointed with us to do this. So go ahead and register. And then after you register, if you write 20 Health Protector Guard plans, okay, you'll get $50 per policy. So back to the first one. So you write 20 Health Protector Guard plans, you're going to get a $1,000 bonus. Then, if you happen to bundle one of our new accident plans, you get an additional $25. And if you bundle a dental plan, you get another $25. So you can earn up to $100 per customer by bundling Health Protector Guard, accident, and dental. If you just do Health Protector Guard and dental, you get $75. Health Protector Guard and accident protector guard, $75. But you must register for that. And that runs April, May, and June. So the entire second quarter. And that's all I have. I know it's a lot to cover in 1 hour. So we covered short term, we covered Health Protector Guard, we covered our accident protector guard plans, and we covered the bonus.
Great, David. That's excellent. No, you did cover a lot of ground. Do you have a couple of minutes quick for a couple questions that popped up? Okay. One of the questions was, do you think that the Health Protector Guard will be available in Virginia soon or any other states on the horizon?
So it is filed in Virginia and California. We're just waiting on approvals. We actually, our headquarters in Indianapolis, Indiana, and we actually just got Indiana approved and launched, here this month, on Friday, this coming Friday. So we're hoping to get Virginia launched pretty soon. California, we're not holding our breath on, but Virginia is one of those states we're looking forward to, yes.
Good. What states have a waiting period? I know when you do the back-to-back plans on short term, are there any? I know back in the day, Michigan fell into that bucket. Are there any other states, or are there states that you cannot do back-to-back on your short term times 3?
Sure. Yeah. So on the 3x2, and actually let me go. Hang on here. Let me. So Michigan, you cannot do consecutive plans, and that has nothing to do with the 3x2. That's just their rules. And then Connecticut. So in Wisconsin, you can actually do one 3x2, so you can do a back-to-back, but then after that, you have to have a waiting period. Okay.
Is it 60? It was some of that number, like 59 days or 62 days or something like that, right?
Yeah, I think 63 days, I think.
Okay, yeah. 63 days, yeah. So nothing in Florida, Texas, jump out at you?
Texas,
Arizona?
Florida, Arizona, yeah, all their states, you can do as many back-to-backs as you want. So other than Connecticut, Wisconsin, and Michigan, those are only 3 states you kind of got to watch those rules on. All the other states, you can sell as many back-to-backs as you want.
Excellent. Back to the short term also, real quick on, I know in the past there were about 7 or 8 knockout questions, yes or no, for the approval of the short term plans. Are there any big pre-existings that kind of jump out at you that aren't the cancer, stroke, stuff that you've had, that sort of thing? Are there anything else that jump out that is a pre-existing that people should be aware of?
No, I mean, for us, the biggest thing on the short term is diabetes. That's something that we will not cover someone who's a diabetic, even if they're on metformin. That's just a condition that we stay away from. I was actually watching a commercial over the weekend. It was a thing about diabetes and stuff, and saying that actually people with diabetes actually have a higher chance of having issues with their heart than they do with the diabetes. Diabetics have a higher percentage of heart issues than any other demographic out there. So that's probably why we stay away from it. Yeah.
Do you have any statistics on the percentage of surgery maybe that's covered between that $500 and $10,000 max? Is there any percentage of statistics on that?
Great question. I don't, but it's something I can definitely try to get. So maybe some claims analysis to say, hey, out of our surgeries, how many, what's the percentage that fall into which bucket, tier 1, 2, 3, or 4?
Yeah. Yeah, because there was a thought that maybe 10,000 was a little low, but I thought, well, let's just ask the question and see, if there's any info. Access with that.
Yeah, and by no means, I mean those benefits, $10,000, is that going to cover heart surgery? Absolutely not. But that's why we sell critical illness. Okay, that's why you might sell, an accident plan as such, to help cover those bigger type things.
Yeah, no, that's good. But yeah, any information that would be great. That's always good to be able to provide that. Yep. And then one last question: what's the average cost of a lab or X-ray or even imaging? Do you have a kind of an average cost of those procedures?
I do. So again, for those of you, I told Sue, but I actually had a virus hit my computer, so I lost every presentation I've done on my laptop and everything else. I actually have a slide. You know what? Hang on here. I might be able to give me 1 second, folks.
Yeah, your screen's still showing, so I haven't turned it off.
Yeah. Let me get into my email. I even lost my ability to copy and paste things.
Oh my goodness.
Give me one. Yeah, it's been a weird few days. But I do have here.
Okay.
So on multi-plan, let's get rid of that. On multi-plan, we asked them, obviously, there's different codes for everything, right? I mean, there's over 500,000 codes because the CPT code, which is the billing code for claims, the CPT code for my left index finger is different than the one for my right ring finger. So there's over 500,000 codes out there. But we asked multi-plan and said, listen, can you give us some examples of some of the basic things? So we gave them 4 zip codes, major cities, Chicago, Dallas, Orlando, and Phoenix, and said, give us the network pricing for some things. So the established doctor visit. So again, this is, I have a doctor and I don't feel good. Let me go. I think I had the flu. Average network pricing in these 4 cities that you see here is, $40, let's say on average. X-ray of the chest, you're looking low $20. MRI of the hip, around $300. Appendectomy of a ruptured appendix, $1,000. Now, disclaimer here on the appendectomy, is that going to be the total bill? Absolutely not. I mean, you've got anesthesiologists, you've got this. I mean, there's so many different codes on there. But just for the surgery itself, the average network pricing is about $1,000 for that part, because you still have your facility fees and all that stuff. But this hopefully will give you an idea of, again, having an X-ray. What am I getting on an X-ray? well, I'm getting $100 to $300 for an X-ray. Average price of an X-ray is under $30.
No, this is great. No, this is very helpful. Do you have your information that you could pop up there? So if agents want to shoot you a question that pops up after the fact, or they obviously can send it to me, but that way at least you're able to answer them directly if they're in a situation where they have to respond to a client. So do you have your email address?
I typically do, but with this new computer, I also lost all my signature stuff. Here, let me just type it here.
Yeah, because what I'll do too is I can send. I'll respond to everybody that attended the webinar, and I'll shoot them an email with your info too, if that's all right.
Yeah.
Okay.
There we go.
Great, perfect. Well, thank you very much. I really appreciate it. Very informative. I think that's going to help agents really get their arms around what the details of the product so they can talk intelligently to their clients, which I know most of them already are doing. At the same time, understanding the nuances of the products really can be helpful, because sometimes the clients bring up the strangest things. So thanks again for doing this. We'll have one maybe next month if that works out to your schedule.
Sure.
Maybe highlighting a couple other products that jump out, and we'll go from there. So, but thank you very much, and we'll catch up.
All right. Thanks, everybody.